Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap section for Thursday, September 29th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, drill down to the trade levels, targets, and our hypotheses for the day. We create multiple hypotheses to fit our trade plan to what the market plays out. We do not try to force the market to fit our trade plan. This is a subscription room, so if you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. Please read through the disclaimer. Each trading futures or any instrument involves the risk of loss. Anybody at Quantum Leap is not a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so yesterday, our Hypo 1 was a open auction, out of range, a move down into the prior day VPOC, maybe down to the 48.44 level, and then find responsive buyers and then move up through to take out that 58.50 naked VPOC and possibly come and test the key line in the sand above at 66. Our secondary hypothesis was an open auction out of range, a move up into the 58 level, and then a move down through to test the naked VPOC from the prior day, and then a push down and a close down somewhere in here with a possible 8-day probe down to that possibly 40.50. We kind of got both Hypo 1 and Hypo 2 yesterday, but overall Hypo 1 was the winner. We went a little bit lower than we had tested. We actually went from key line in the sand to key line in the sand. So we tested that whole distribution zone yesterday, and we were unable to break out. Last night, we closed near the highs on a neutral extreme day. We broke the IB low and the IB high, so we had neutral day. And then we were looking for the possibility of the neutral extreme, which would have been our Hypo 3, to play out and give us a late day probe through 66 and up into the 70, 75 area and up towards our daily upside ATR. We didn't get it, and overnight I was looking for continuation, and we did break the 66, but we only got 1 point above it to 67, and then we failed off of it, and we come all the way back down towards the IB high area and the naked VPOC that was in around the 58. So kind of a interesting overnight action. They did not get the continuation we were looking for. We're coming back down and we're testing this 59 area again, trading around the 60.75. Remember, 60.75 is the value area low for the value that we're trying to get back into, and then 60.75 is the value area high of the level that we broke out of on this gap up day, and we've been unable to hold the gap up and hold inside of this value. Key levels are still going to be 66 and 44. 59 now comes in as a warning line. Below 59, I'm looking for a pushback and a test of this upper distribution lower side down in the 54, 52 level. You can see that the microcomposite VPOC of the value that we're trying to stay above right now is the 54.50, and then we've got the CHVN 52.25, and that 53 level has been very strong, and a lot of price acceptance around that level. But 44 still remains the key line in the sand below, because if we come back and test it and don't hold, then we're looking for a bigger move, and this time I do not think we'll get the bounce that we're expecting. I think we'll get that push through down into the 27, 29 area and a push through. You can see that if I take the this profile right here, and I move it back a bit to before the breakout day, you can see that the microcomposite VPOC down here is down here at 2875 area. And I'm just going to do this. Price acceptance is still above the breakout of the prior day, prior microcomposite, but we're sitting on top of a key level right now at the, we're now below it. We're coming back into this balance area right here. You can see the longer time frame. You've got this distribution zone, which is the most traded price, which is still above us at 72.75, but we've got some pretty strong price acceptance in around this 52.54 area. So we can't hold the 59. If we break the 59, look for them to come down into the 54 to 52 area. 44.50, still going to be key line in the sand. Below that, 42 and 40.50. And then I think once we're on this distribution, we'll test the lower side of this distribution and come back down into balance in around the 28, 29 area. If we can get above the 59, again, our resistance is going to be 66 above, and anything above 66 puts us up into this distribution and a move back towards that 72 and 74 where we failed on the breakout day. We gapped up and we could not hold up there in that value. So if we can get back up there, I'm looking for a trip through the gap and up into the stronger, longer time frame price acceptance. Let's just take a step back though and take a look at the macro to micro. I like to do that every morning just to keep me aware of where we are in terms of the time frame, starting with a monthly. I use a 9 EMA, a 20 SMA. I'm looking for slope and separation and where the trend is being challenged or violated. This monthly trend was multi-year, challenged at the end of 15, beginning of 16, and since then we've taken it back and we're getting continuation and a push up to the all-time highs, and that unadjusted high at 2191.50 for September, and the all-time high for December at 2185. Our month open is 69, so we are still in a bearish month, but we are holding the 9 EMA on it. Our week open is 2156 and a quarter, so we're slightly above the week open. So we are in a key level between the month open at 69 and the week open at 56 and a quarter. On the weekly, we are still in a upward trend. We came down and challenged it, came down and tested the 20 SMA, and then broke back up last week, and so far this week, we're back up and holding above the week open and above the 9 and above the 20, and still have a upward continuation pattern on the weekly. On the daily, we did on the daily, we did come down and break below the 9 and the 20. It looked like we were going to get the downward continuation. Since then, they've taken it back, and we're above the 9 and the 20, and we're starting to get a possible continuation, but it's more consolidation. You can see that if I draw a trend line, we're in this consolidation, we're in this symmetrical triangle, which we are range bound right now, and failure to break above or failure to break below, and we're looking for a continuation move to the upside with a break to the upside and failure if we come down below. But there's no clear indication which side the break is going to be just yet. But we are above the 9 and the 20, so the trend is still up on the daily. On the intraday, you can see that we did move up yesterday in the Globex. We tried to continue. We failed to get above the 66. We only broke it by 1 point and then we come down and tested the 9, and we're holding so far. So we're challenging the upward trend, but we still have some slope, some separation, so the trend is still intact on the 4-hour. On the 1 hour, you can see that we've got a bit of a rollover rounding top here, and we're below the 9 and the 20. We're got an MA squeeze going on right now, and we're at a decision point, and we're below the 9 and the 20, so we could see a move down and possible failure to the low side on the 1 hour. On the 30-minute, you can see that we do have slope and separation to the downside. We've got a start of a downward trend. I'd be looking for a move down towards this 54 area. You can see that we've got some support down here, which was resistance in around the 57 to 54 area, but the trend is overall down on the 30-minute. On the 15-minute, you can see that is much stronger. You can see that we do have this strong downward trend starting with slope and separation to the downside, and then going to the 5-minute, you can see again that we had a pretty strong downward trend. They tried to take it back, they failed. Get the continuation pattern, created the technical gap, come up and close the gap, try to get above the 20, and right now we're trying to hold the 9, but the overall trend is down as we move towards the smaller time frames. So taking a look at the overnight session, we had a pretty good Gaussian distribution up until earlier this morning, where we broke through the low of the day, or Globex, which was at 60.75, and came down. We're creating this lower distribution node. The news gave us a little bit of a pop-up, but we did not hold. Taking a look at the news, we've got the final GDP numbers came out. 1.4 was a beat. Unemployment claims was also a beat, 254 versus 260, not great. Final GDP price was right on, and good trade balance was a little bit better. So we did not get a big spike off of this. I actually got long at 58 1/4 and got 60 out of it, but that was it. And since then, we've come back down and tested it. 9 o'clock, we've got the Great Britain member Forbes speaking, but the big news is going to be FOMC member Powell speaking, pending home sales at 10 o'clock, and then natural gas. And then 4 p.m. near the end of the day, Yellen's going to speak again. So that should be interesting going into Globex for Friday. And then Friday, we really don't have a lot of news on Friday. We've got PCE, personal spending, Chicago PMI, and University of Michigan consumer sentiment and inflation. But those really aren't big movers. So I think that today is going to tell the story to the end of the week. So taking a look at our overnight, we've got our overnight high up at 67. Just above the key line in the sand. The key line in the sand is not going to move. And then we've got the overnight low at 57.50. Now we're near there, so we could go down and test the 57.50. It is our IB high that we were looking at breaking for the neutral day yesterday. That was a great trade that we put on. It is also going to be a key trading area for us because of the fact that it is a LVN of this trend day. I shouldn't say it was a trend day. It was a neutral extreme, but an extreme is like a trend. So the value areas are not as strong as what you would get in a normal variation. You have to look at neutral extremes in terms of late day trends. and therefore the value is really left below. We left the value all the way down here at the 48.50. It never shifted up into the upper distribution. Our overnight VPOC, though, is up at 62.50. And our overnight low, it could get lower. We're only a couple points below the overnight low. You have a clear Globex LVN in around that 60 area, which also happens to be the value area. So I'm going to be using that as a trade area, not because it's the value, but because it's the LVN from the Globex. And that's really all the information that Globex is going to give us. So moving us down to the bigger picture. 66 remains the key line in the sand above. 43, I'm going to move this up now to 44. You can use the 44.50, but again, you have to you shift when you're looking at price acceptance and rejection. Your Globex, your composite and your microcomposite is your big picture, but you have to put weight onto the smaller time frame when they come to key levels. So 44.50 is the CLVN, but I will be using 44. I was using 43.50 for the same reason. Yesterday I was using the midpoint at the 43.50 and the LVN. I'm using the range low from yesterday at 44. So levels, 57.50, the IB high targeting below. I would be targeting the open and the midpoint and the VWAP in around the 55. I'm actually, as I said, going to use the 54.50 because of the fact that it's the microcomposite VPOC, and then obviously just below that the secondary target is going to be the 52.25. I'm going to use 52.75, and then we've got the IB low and the LVN here at 51. I'm going to be using that as a trade level at 51.25, and then below that I'm targeting the 44 with the other side of the balance down here at the 44.50. And then all our levels remain the same. Our daily ATR is 24.21. So off of the high overnight, our daily downside ATR target shifts up to 42.75. And off of the low overnight of 21.57, was it 57.50? 57.50 plus 24.21 brings us up to 21.81.75. Come on. Okay, and then if I look at the week right now, our weekly ATR is running at 49.2625. Our week low right now is 32.75. So if I add the daily, the weekly, that takes us up to, no, that's got to be wrong. Our weekly low right now is 21.3275 plus 49.265, so 21.82. So that brings our weekly. Why do I not have my weekly on here? Okay, that brings our weekly ATR up to one tick above our daily. So our daily and our weekly ATR target is sitting in the same spot and just above these three key levels and just below the 83.75. Our weekly downside ATR target, our weekly high, is the 67 that we put in overnight, and that gives us a downside daily ATR, weekly ATR down at the 2118. Which is less likely to be tested today. So within our daily ATR, we now have the ability to come up and test the weekly ATR. So that's significant, especially with all of this going on. We've got naked close at 68.25, naked VPOC at 70.25, naked VPOC at 73.75, naked VPOC at 78, naked close at 78.25, and naked VPOC at 83.75. So a lot of unfinished auction above if we could break the 66. And this will be my key target today, is going to be up here if we can get above the 66. Below us, we've got a lot of distribution zones from yesterday, so if we fail to get back outside of yesterday's value and above this warning line of the 2060 50, 2060 75, then we could walk our way down to the 48. So let's talk about our hypotheses for the day. My number one hypothesis, or hypo 1, is an open auction in range, a move down towards the midpoint and yesterday's open at the 54 to 52, and then I'm looking for responsive buyers to step in somewhere between that 54 and 52. I'm looking for 50, 51 to hold, and then a rotation up through, and then taking out the overnight high and moving up into this level up here between the 70 and 73, with a possible move up into the 80s to test the weekly upside ATR target. So hypo 1, open auction in range, a move down, test the 53, 52 level, hold the 51, maybe down to the 48, and then rotation up through. And that will be hypo 1, with the destination and the key target above being the 70.25 and 73.75. Hypo 2 is an open auction in range, a move up to close the gap, failure to break out of the prior day range, or a false breakout, and somewhere between the 66 and 70, looking for responsive sellers to step in and move us down, and continue us down towards the 48, chop around down here, and then push through down into this 42 to 40, 50 level, with maybe a late day probe down into back to the return to the scene of the crime 36 area of the FOMC. Hypo 2, open auction in range, a move up, failure to break out, or a false breakout, and then rotation down through and moving our way down through to the 48 being the key target, with a push through and a breakthrough of the key line in the sand and come down into this 40, maybe a late day probe into 36. That's hypo 2. Hypo 3 is an open auction in range, a wide opening swing, probably an open test drive, and then somewhere between the 56 and 53 area, move up into the 70 area, chop around here, and then get continuation wave and come up and test the weekly high and the daily upside ATR target, and take out this 82 and 83 level, and start moving towards the all-time high, maybe a late day probe to put a new all-time high above 85. Remember that 85 is your December all-time high. Oh, right. And then our 91.50 is our September all-time high. I'm going to call it unadjusted all-time high September. And then, of course, we've got the 2200 and then the rule of 10. And that's all I have to say about that. And then, so our hypo 3 is an open auction or open test drive, push up, take out the 66, push up into the 70, 73 area, and then get continuation up into the 2180, maybe late day probe to put in a new all-time high. Hypo 4 is open auction in range, failure to get above the 60 area or come up into the middle of this upper distribution, but a failure to break out, a push down into the 48, chop around here, push through, and the destination really on hypo 4 is going to be a trend day down towards that 28, 27 area, maybe push down to our weekly downside ATR and that key target below down at the 18 level. So that's going to complete our pre-market session. I have a lot to talk about, so I took a little bit longer. Watch this right here. We've got a possible zipper measured move. I'm just going to do a quick assessment here. We had this move down. It wasn't really big, but it was a measured move. Let's see if we've hit both targets. The 100% is 57. We missed it by a couple ticks. And then if I draw another one, if, and I say this, if it sets up, we've got this possible measured move. If this candle closes negative, then we have a secondary measured move, and the target is going to be, look at that, 54.75. That microcomposite LVM or VPOC, with the extended being down at, well, 52.50, right around at 52.75, 53. So look, we're seeing some weakness, but that doesn't mean that it's here, and it can't change with the open of the RTH session, but be aware that we only broke out of the key line in the sand by 4 ticks. So therefore, if we do set up with this zippered measured move, I'd be looking for continuation down and back towards this 52 and 48 area, and seeing probability of hypo 2 or hypo 4 kick in and a bigger move down. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.